Is Nvidia hiding something? Are the world's biggest AI investors secretly being funded by Nvidia itself? And if these accusations are true, could we be standing at the edge of the biggest AI bubble of our time? Because two legendary short sellers, Jim Chanos and Michael Burry, the men who predicted Enron and the 2008 crash, believe the warning signs are flashing again. So, what is Nvidia really doing behind the scenes? Let's find out. आप दुनिया के जहां भी रहते हैं. If you want real deep financial investigations like this one, make sure you subscribe to the channel. Let's continue the video. Over the weekend, Nvidia quietly sent a 7-page memo to Wall Street analysts. Why? To deny one of the most damaging accusations a $5 trillion company can face. Circular financing, the idea that Nvidia invests in its own customers, loans money to them, and then those customers use that same money to buy Nvidia chips, making Nvidia's revenue look bigger than it really is. This is exactly the kind of scheme that led to the collapse of Enron and Lucent in the early 2000s. But this time, the accusations weren't coming from small-time bloggers. They were coming from Jim Chanos, the man who exposed Enron, and Michael Burry, the man who saw the 2008 housing collapse before anyone else. When both of these men raise the same red flag, Wall Street listens. Jim Chanos didn't hold back. He said, Nvidia is putting money into money-losing companies in order for those companies to order their chips. And here's the scary part. When he predicted Enron's fall, the signs looked exactly like this: off-balance sheet financing, suppliers investing in customers, customers using loans to buy the supplier's products, revenue appearing inflated, demand looking stronger than it actually was. Chanos believes Nvidia could be repeating Lucent's playbook. Lucent loaned billions to tiny telecom startups. Startups used that money to buy Lucent routers. Lucent reported record-breaking sales, but when the startups couldn't repay their loans, Lucent collapsed. Chanos says the similarities with Nvidia are concerning. That's not a small word from him. That's a warning from a man who has seen this movie before. Michael Burry went even further. He didn't just question vendor financing, he questioned Nvidia's entire revenue recognition model. On his Substack, Cassandra Unchained, Burry wrote that the AI market is being built on massively overbuilt supply and nowhere near enough real demand. He compared today's AI market to the dot-com bubble. Too many chips, too many servers, too many data centers, and not enough users. Burry's argument is simple. Demand is artificial. Supply is explosive. Money-losing AI startups depend on Nvidia, and Nvidia depends on them continuing to buy chips. That loop is dangerous. If even one major customer collapses or slows its spending, the entire AI market could feel the shock. So, what did Nvidia say in its defense? In the memo, Nvidia claims, "We do not use vendor financing. Our customers pay us within 53 days. Our business is economically sound. We do not resemble Enron or Lucent. We are a generation ahead of competitors." Nvidia insists that the AI boom is real, that demand is off the charts, and that the comparisons to historical frauds are exaggerated. But here's the complication. Nvidia has invested heavily in its biggest customers, OpenAI, xAI, CoreWeave, Nebius, and multiple AI cloud startups. These are not small checks. These are multi-billion-dollar bets, and many of these companies are unprofitable, highly leveraged, burning cash, and dependent on Nvidia chips. That's where analysts are getting nervous, because even if this isn't fraud, it could be a bubble built on circular dependence. Chanos pointed out another warning sign: off-balance sheet debt. Meta, xAI, and others are reportedly using complex financing structures, the same strategy Enron used, to buy GPU capacity without putting the debt directly on their books. Meanwhile, companies like Anthropic are borrowing billions through traditional debt. Think about it. AI startups lose money, they borrow money, they use that borrowed money to buy Nvidia chips. Nvidia reports those purchases as revenue. then Nvidia invests in those same companies. This loop is what Chanos calls the Achilles heel of the AI market. His fear is simple. If AI revenue is built on layers of debt, it can collapse the moment interest rates squeeze those companies. Even if there is no fraud, even if Nvidia is completely transparent, there is still a massive risk: overbuilding. Burry says the AI industry is building too many chips, too many racks, too many data centers, too many GPU clusters, all before real demand exists. This is exactly what happened in the dot-com era. Companies built huge internet infrastructure, but users weren't ready. Revenue forecasts collapsed. The bubble burst. Today, everyone is racing to build AI capacity for 2027 and 2028. But what if the world doesn't need that much capacity? What if AI adoption slows? What if spending drops? Then, orders get canceled. Data centers sit underused. Chip demand falls sharply, and Nvidia's revenue could shrink fast. This is the scenario no one wants to talk about. After looking at everything, the accusations, the memo, the history, the financial structures, the warnings from two legendary short sellers, we arrive at the biggest question: is Nvidia manipulating its numbers? Or is the AI market simply overheated? Here's the truth: there is no proof of fraud. But there is mounting evidence of a fragile ecosystem: heavy debt, unprofitable buyers, circular money flow, speculative spending, weak real demand signals, extreme assumptions about the future. This doesn't guarantee a crash, but it does mean one thing. The AI boom is far more fragile than the headlines tell you, and whether Nvidia is hiding something or not, the risks are real, the pressure is rising, and the AI market may be standing on a cliff edge, just like the dot-com era. If you want more deep, investigative, documentary-style financial breakdowns like this one, make sure you subscribe. Thanks for watching, stay aware, stay sharp, and I'll see you in the next video.